Hi guys, I'm Rich. Let's go through my top 5 things to watch for the week ahead in markets. Number 1, US CPI. The latest CPI release out of the US this week will be seen as pivotal in determining whether the Fed pushes ahead with a larger 50 basis point hike or opts for a further smaller 25 basis point hike. Last week, US dollar was seen firmly higher in response to hawkish comments from Fed Chairman Powell, who warned that the Fed would likely need to hike rates faster and further than currently projected to curtail the strength in the economy and a fresh rise in inflation. If CPI was seen holding around prior levels last month, this should confirm a larger hike with only a meaningful drop in inflation likely to sway expectations back in favor of a smaller hike. Number 2, US retail sales. Following CPI, attention will then turn to US retail sales for the latest look at the health of the US economy. On the back of the explosive move higher in January, traders will be looking to see if activity continued to grow last month or if there was any give back. Resilience in the US economy has been a cornerstone of the hawkish Fed outlook, and so any disappointment in this data could fuel fresh uncertainty ahead of the FOMC. Also, further strength will see US dollar well bid. Number 3, March ECB meeting. The ECB meeting this week will be pivotal for the direction of the euro in coming months, with a further 50 basis point hike well signalled by the bank, and likely priced in given the bullishness we've seen in the euro. The focus will be on the bank's guidance and signalling on further rate moves. Stickiness in eurozone inflation last month alongside hawkish commentary from several ECB members, including ECB head Lagarde, suggests that risks are skewed to the upside, with the bank likely to signal further aggressive action to come in May, unless inflation shifts sharply lower near term. Number 4, New Zealand GDP quarter over quarter. The latest Kiwi GDP data will be another key market focus point this week, on the back of the RBNZ warning that it would push ahead with continued hikes this year, though at a slower pace. Traders will be looking to see whether any material shift in GDP might upset the current outlook. Recent weather disasters in New Zealand hold the potential to skew activity lower. However, if the GDP is seen dipping below or rising above the RBNZ's own forecasts, this might cause the bank to reappraise its tightening campaign. Number 5, UK labour data. The latest UK jobs data will be the final market focus point this week. With expectations of a forthcoming pivot from the BOE, traders will be looking to this week's jobs data as a heads up for CPI. If wage growth is seen slipping back again, this should support the view that inflation is firmly on the way down in the UK, keeping Great British Pound pressured lower into the BOE. Any unexpected strength, however, will likely see Great British Pound reversing higher near term, casting uncertainty on the BOE. As always, you can click on the link in the description just below to see the full economic calendar with the previous month's data and the consensus expectation for this time. But for now, thanks everyone, good luck trading this week, and make sure to smash that like button and hit subscribe so you don't miss more content like this when it's released.